The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. I'm your host here, and on TFNN.com, TFNN.mobi, coming to you at your mobile phone and live inside the e-signal platform. All right, so let's check out where the markets are at right now. Right now we have the S&P and most of the indices right here. Like all the indices are up slightly. S&P is up right now just a couple points. And let's see, it's at 2085. We got the Russell is at 1208.2, and we got the Dow is currently up 17,387 with the Nasdaq at 4541.25, just up 7 points on the day. Going on into gold. Gold is currently looking down, slightly down 8 points right now at 1115.3. And we got copper is in slightly positive territory at 2.3520. Going on into our energy sector, we got oil is currently sitting at 42.23, down $1.07 out of the day. So some nice down moves on the dollar. We got on oil there. On Nasdaq, we got it. It is currently down as well, down 0.114, sitting right now at 2.818. Going into the ag sector, we got corn and soybeans. And let's see here. We got corn sitting at 372.75. That's up a few, 4 or 5 points almost for the day. And we got soybeans at 918.75. So up 9 points for the day. A good move on soybeans. Looking at our bonds and our dollar index futures, bonds are slightly in negative territory, down 0.18 at 158.02. And then we got the dollar index is up slightly, up quite a bit actually, sitting at 9. Let's see, what is that? 96.510. And I got to figure out how to change the font on that platform. We got the euro dollar right now is in negative territory. It is down at 1.140. Euro yen is at 138.49. Euro pound is sitting down at 0.7142. So all negative territory at the moment. Pound dollar is also down, so king dollar reigns supreme against all these. Yen actually strong against all the currencies. Right now we got pound dollar down 1.56, so we got pound yen is sitting right now at 1.9378, down 18 pips. And dollar yen, like I said, moving on up. Let's see, yen is stronger against all the pairs except for dollar stronger against the yen. Dollar right now sitting at 124.37. And up 13 pips against the yen. The Aussie yen, though, the yen is winning. Aussie yen is down at 91.48, down 15 pips on the day. Aussie dollar is down. Dollar is winning. Second pair is the one that is winning at the moment. And second pair is at 0.7356. Dollar franc at 0.9769, up 19 pips on the day. Let's see, dollar CAD 1.3073. That's up 8 pips on the day. And that covers your market wrap. So a lot of markets getting you caught up for the lunchtime right there. And let's see, what were some of our top headlines? Let's get those covered for you and go through them. Looking over at Reuters right now, solid U.S. retail sales come out, and that bolsters that expectation of a Fed rate hike. So Goldman has been saying that they expect, this is all year, they have been saying that they expect the Fed to raise the interest rate in September. So let's do something real quick. And let's look at this. You can go right now and see that, core retail sales basically meeting expectations. They also revised up the previous numbers, okay? So they revised up, like the last number they had for July 14th was at, negative 0.1. They actually made that up to positive 0.4%, which still didn't meet the expectations of last time, but was better than the last number. They not only released the number, they released the revised number. But let's look at this, and let's see what's going on. I want to bring this up. I'm going to bump it forward a month. And because we're going to have the Jackson Hole thing where they do that whole big thing. We're going to scroll down here to the Fed. Okay. And I talked about something yesterday. What I talked about, and I'm going to bring it up again, is how seasonally we usually see the market and how it moves. Let me see. Let me pull this up. And this ought to give you a good little action plan. And the Fed has a habit, for whatever reason, of surprising people on the September one. It's a big one. Okay, we got the FOMC projections, we got the FOMC statement, we got the Fed funds rate, we have the press conference. So there's a lot of information coming out. This isn't just a Fed funds rate. It's not just meeting minutes. Okay, so it's the whole shebang there. And the Jackson Hole Symposium actually is going to kick off on day one, August 20th. And things come out of that. Okay. And all these things lining up. It's going to make for a really interesting month. And, well, you know what also happens on August 20th is Greece has to make a big multi-billion-dollar payment to the EU. Okay. So that's coming up. Let's see. They're supposed to have a vote. And I talked about that yesterday. This is all going to come together in one big piece here in a moment. But the Greek government had to come together, and they had to agree on the creditors' third bailout program. That happened last night. Okay? I talked about that yesterday. And it was expected to pass through Parliament and all that stuff. Prime Minister bailout was seeking that to make sure that happened. And so if I go over here and we look at the euro dollar, let's look at the euro dollar. What happened last night? And the expectation is that it will pass. Expectation is that it will pass. It's supposed to come out sometime today. And let's see, let's go over here to the Hellenic Parliament. Let's see, what do they got? The Supreme Democratic Institution representing the members. Let's see here. So far, nothing up. So you can actually keep track of, all this fun stuff over here. But they're supposed to have their vote come out. And talking about a global society now. We're all like focusing on other countries' votes. Anyways. So that vote's sort of sitting around. The market's going to be waiting for that because when that vote comes out, there's going to be some big movement. Okay, up or down. Obviously, if they pass it, which is expected, euro gets stronger. Okay, or does it get weaker? I mean, that's the fun part of this whole thing, right? Like, literally, does it get stronger or does it get weaker? And why would I say stronger or weaker? Well, if it passes, that's strong because, that means there's more likely that it's going to stay in the EU, and that's more stability. But it's also weaker because it's less stability because you have this country who still can't seem to pay its bills. And you still have, Germany who's got to agree to everything. So, like, it's a good thing and a bad thing if they get approved. So just expect volatility. Don't necessarily expect direction on this. We can go back. We can do some, we can do a little research. We can, look at some charts. We can back up a little bit. And we can go, okay, well, what's going to probably happen if this happens? Where can we expect it to go to? Well, we got 2141 from 1141. I would not be surprised at all to see it pop up and just nail that number. Okay. If it goes up or if it goes down, I mean, we're going to equally fly on down. We're going to have some big old moves down to 1.024. So basically a solid 100, if not 200 to 300 pips should come out of this announcement. Okay. So knowing that and knowing it's Friday and knowing that we're waiting on it to come out, what can you do? Well, what if it doesn't come out by 3 o'clock today? Well, you have binaries that expire at 11 p.m., 7 a.m., and 3 p.m. tomorrow. Right? So we can look at a variety of assets. And like I said, I'm going to bring all this together. Okay. We can look at a variety of assets, but so we could go in, we could check out the scanner, and we could say, you know, what is on the docket that might set us up for a good trade when this vote comes out. Or is it even possible? Is the IV so high that there's just nothing that's just like going to be fantastic sitting there for us? Okay. So I'm going to pull up some binaries. I'm going to go in here and I'm going to let's see here. Pull this up. Give me one more second. And there we go. Okay. So as I'm pulling that up, just took a little longer than I expected. Now let's go in and let's look over here at the potential move. That's distracting. Okay, at the potential possibilities here on the euro dollar. Okay, and let's just see, you know, what is there. Okay, so coming on down, we'll pull this down way down here. And, you know, what do we not want? We're really only wanting dailies and, you know, maybe weeklies, right? So, you know, dailies, I'd probably say we want a 1 day minimum. We'll do that. We'll do any with 1 day minimum. That puts us over to 3 o'clock tomorrow. And we go, okay, so what did we just say? What do we expect? We expect, you know, the market's sitting at 1.1390. And with the chart that we had up, just, you know, yesterday's highs, okay? 1.2140, okay? 1.1410, where the market's sitting at right now. That's a 1.240. I mean, so we could look at, you know, one of these contracts right here. And then we're looking at, you know, an easy 100 pips down. Okay. So 1.14 is going to take us on down. So let me bring that up. And we'll look at it when we get back. So stay right there. We're going to put all these pieces together. Okay. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, so we can look at the charts here and basically just, looking at highs and lows and where we expect the market to go. And we got the market going up to 1.212 over here. If we go, depending upon, we got 1.2141. Depending upon exactly what chart you're focused and zoomed in on. Let me see here. I'll zoom that out. Anyway, so we have, just looking at these pricing expectations, we can, move up to about 1.21 something. And, you got to be real careful about that 1.10 number. That's going to be some major resistance right there. As you can see, 1.1020 right there, that gives, pretty good resistance as well. So you can see it's all the prices running through that over the past few days. So that's more of our easy numbers to hit. Okay. Now I could say, well, I'll do a trade until 3 o'clock or 7, or 11 or 3 p.m. tomorrow versus 3 a.m., tomorrow. And I can look at the prices. I'm looking at 455, 825 or 850. Okay. That one does put us a little bit higher, that 1.275. Okay, so I'd be sort of shocked if they didn't have it done by then. We can get right for 1.1260. If I go up to the list here, 1.1260, 260. So sort of putting us just right out of that range. 1.1240 is a little better. We can get over here, 750. And we can come down here. Starts getting a lot more expensive. Come down to this one, going closer to 1.1240, which is going to be right in the middle of the really 1.1240 for the weeklies until we hit. Now, once we pass 3 o'clock today, we'll most likely have that on the daily 3 p.m. expirations. Okay? And then we want to stay right around 1.102. And I get that for like $89 right now versus $92. So literally a $3 additional risk. Let's say 95 for 7 a.m., 96. I mean, that's only $4 risk for 3 a.m. If that vote comes out anytime between, before that expiration, then, we're not going to get the move we want. So this is a low risk straddle where you're expecting a large move on the trade. Now, it may fly up and pull back. That happens a lot on these big euro-dollar moves. So I'll go in there, and I want to cover my total risk on the trade. So let's say I go in, and I sell, say, 20 of the 1.1025 contracts, okay? And then let's say I go in and I buy, 20 right here of the 1.1275 contracts. Now, what is my risk on the trade? Well, I risk 12 on one side, okay, and I risk 8 on the other. So I have a $20 risk. All right. That means ideally I would like to net a $20 profit on the trade that I'm doing. Simple enough, right? And so what does that mean? What that means is I need to go in, and I can, take my, trade tracker over here, and I'll be down pretty much the bid offer spread on these until the market either moves or doesn't. Okay, like quite a bit. But I'm going for $20. I'm not trying to get rich. Okay, if this trade works, I make $400. All right. So I can go in here, and I have a couple ways I can do it. Simplest, easiest way is I'm risking 20, try to make 20. So if I bought at 20, then I can go over here, okay, open a ticket on up, and I can say, hey, if I bought at 8 to make a $20, meaning my total risk in a 12 plus 8 there, to basically make $20 per, contract, $400 total, then I'd want to sell $20 higher. Okay? That's what the logic seems. I mean, it's that accurate. Okay, well, I'm making 20, but I need to assume, and this is what gets people, okay? I need to assume that the other side is going to lose, right? Not that it's going to break even. So if the market flies up, my $8 position, hey, I get all $8 back plus $20. That's $20 I made on my long. But let's say it doesn't go down at all, then, well, I'm going to lose 12. Or I guess 1150 to be specific. Okay? So not only do I want to make my total risk of $20, but I also want to make what the other side is going to lose. So $20 plus what's the other side's risk? It's $11.50. So $88.50. 100 minus $88.50 is $11.50. So instead of just 28, I want to add $11.50 to that. Okay, so I want a 20 plus $11.50. And so I'm like, okay, so what do I need to do to that? Well, let's make that $39.50. Okay. And now if it gets even close to 1.1025, okay? Sorry, 1.275.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And we're looking over here and then sort of, finished up on that last one. We got right here a take profit there. We had to get the $20 plus the $11.50. So we bought at 8, added 30, 31.50 to it. And so we're getting out at 39.50. We're going to place that order. Okay. Now, we want to make $20 and we're risking $8 on the bot side. So if it flies down, we want to make our $8 back plus our $20. So what we need to do is we need to buy back $28 lower. So I'm going to open a ticket over here. Okay. And we're going to take $88.50. So $8 off of that. We're going to have, $80.50. And then $20 off to that. We're going to have $70.50, $60.50. So we want to buy back at $60.50. Okay. If we do that, put that in, we're done. Okay. So verify that order pops up is working. It's working for us. Nothing left to do. All right. So market gets to move. Market gets to do its thing. You're done. And so if it happens in the next hour, or if that vote comes out in the next 12 hours, we make, $20 a contract. It's not, like I said, it's not a get rich massive thing. It's just, this is an example, okay, of a way to play this trade and not have to babysit your computer. Okay, so we're looking at a big move off of the Greek vote. Now, nothing may happen It may just stay flat. It may not move enough at all. We may lose $20. But we know what our risk is. Our risk will not ever get larger. It doesn't matter if the market goes up. If it goes up enough, we can profit. If it goes down enough, we can profit. If it stays flat, we can end up losing on the trade. Okay? So we could make more. It could explode right through our price levels, which would be awesome. We don't know what exactly is going to happen on the trade. And that's the whole point. There is an expectation that it'll go up. But again, there's an expectation that they'll vote yes. But what impact will that have? The market may fly up because, yay, it's not going to crash the euro. But, oh, crap, now this crap is still in the euro, and boom, it flies down. Okay? So, I mean, it can literally go both ways because, well, that's going to mean more printing to take care of these guys. And, you know, who knows? It may fly up. This is the best world, and this does happen sometimes. You know, it's not often, but it does happen. Sometimes it'll fly up, and then it'll fly down. We have more than 24 hours for this move to take place, and we've easily had 100-pip moves on the euro with no problem, okay? So if that happens, then we can make $20 on both sides. We could add a 200% return and walk away with $40. And actually, if that happens, that means we won't lose the other side of the trade. And, you know, we projected to lose the other side of the trade, right? So we're going for, you know, what, 28 bucks on one side. We're going for 50 on the other side. So we could make $60 on our $20 risk, actually netting, you know, like I said, a 300% return on risk, getting all that money back on top of it, because we'd get 60 back, plus we get the 40 back, so we get 100 back. You know, I mean, on both sides, I mean, it'd be awesome. It'd be a great payout. So that's just flying up, flying down. That's not a $100 payout because we're not holding it to expiration. But if it does fly up and then it flies back down, then, like I said, we'll have a very, very nice profit on the trade. That order, being a limit working order, continues to operate no matter what. So I literally can put the trade away and just let it do its thing. It's sitting on the exchange, okay? So because it's a limit working order. It's not a stop order. It's a limit order. So when you have limit orders, they're out there working, okay? And that's one way to play it. Now, I was also bringing in some other facts. Let's get back over to that. They're voting, okay? But they also have a payment due on the 20th. And what else happens on the 20th? We got the Jackson Hole Symposium, okay? What is that? That's when it's over at the Federal Reserve, you know, by Kansas City. It's this big, massive economic symposium in Wyoming every year. It's attended by all the bigwigs, all the central bankers, the finance ministers, the academic, you know, professors, the big financial market participants from around the world. So it's closed to the press. So the press can't be in there, but they're going to come out. They're going to say things. Okay, now this is August 20th. We got a little bit, okay? But next week, okay, they're going to come out next Thursday, and they're going to be talking, okay? And it's going to go on for a couple days. So we got day 1, we got day 2, we got day 3, ends on Saturday. Usually, it's like they sit it down and they have their little roundtable discussions, and I don't know what happens. But then they come out of the door a couple weeks later, the Fed does, and they like to go, hey, surprise, you thought we were going to do this, but we're going to do this. Or we talked about this bomb, and you know what? Boom, we're raising the interest rates. Or, you know, whatever it is that they like to do, they like to surprise the market. So I expect either, oh, wow, they really did it, or everybody thought they were going to, and, oh, wow, they didn't. What does that mean? Well, yeah, of course, either they're going to do it or not. It means big move. Okay, we're going to get a big move off the Fed funds release in September. Now, yesterday, I was pulling up and I was looking at all these charts, and I was going into seasonality, right? And I said, hey, if we go over and look at the S&P and we pull up a seasonality chart, so if I go in here, that get me a seasonality chart right there. And, you know, let's back out at weekly views over, say, the last 5 years. Okay? And then let's go to, let's find September 15th. The market has usually got hammered right as Jackson Hole happens. See this? The week of Jackson Hole right there, the market gets hammered. Boom. Over the last 5 years. And it usually leads up, going up to it. So positive expectations, and then pop. And then in October, the Fed has some magical answer that makes everything positive into the end of the year. Okay? So it'll be really interesting. But if they do raise the interest rate, that is going to make loans more expensive, money more expensive. It'll increase the value of the dollar significantly. Even though they're only going to do it in quarters and it's going to take like 4 years, but it still will increase it. So it'll make certain commodities get cheaper, okay, because the dollar's worth more. And it will have a negative impact, most likely on the market that they're raising it. It'll show strength. Hey, we think the market's so good, that we can raise interest rates. But the last time that happened was during the internet boom in the Clinton era, and I don't think we're quite in a boom, okay? So we got August 20th with Greece and them having to pay their payment, and still in between now and then we got them having to make their vote and Germany having to agree, okay? And on the same date, we're going to have the Jackson Hole Symposium going on for 3 days. And then a few weeks later, we're going to have the big Fed funds announcement. So we're going to have a lot of volatility. It's almost like this has not at all been a normal summer. Usually it's just sell in May and go away and come back another day because it's boring in the summer. Well, no, it's not. So very lively this summer, very lively this week, very lively. It's just been fantastic for trading. And then we usually get some nice moves in September, October, and then November. It's usually sort of boring and slow, but who knows? These Fed heads and these countries are really the gift that keeps on giving. If you'll take advantage of volatility instead of be afraid of it, then there's a lot out there and a lot of volatility and a lot of opportunity to go in, jump in the markets, and grab some nice, ideally some nice profits in the process. Okay, so that gets us through that whole. Like I said, I was going to wrap it all up, all back together, and go, why does all this come back to September 15th? And it's the Greece crisis. It's all these announcements coming out saying, hey, there's most likely going to be a Fed rate hike. It's the Greek payment, German payment, Fed symposium, and then ending with the Fed funds announcement, speech, rate, economic projection, everything right there in the middle of September. Okay? All right. So that was definitely a mouthful, but it gives you just a good idea on what I'm looking for over the next month in the market. And people go, well, how do you trade that? Well, I showed you one way I trade it, but the main way I trade it is I expect volatility. And so I'm just ready to trade volatility. I don't do a lot of big fundamental, this is how I'm going to trade. I'll trade news and I'll say, hey, here's the expected move. How can I trade it either both ways, either neutral or, directional? But beyond that, I don't do a whole lot on, fundamentals, because fundamentals eventually roll out. Sometimes they're false and wrong and corrected. I just go, what's the usual normal impact over a short period of time? How can I take advantage of that? Beyond that, I follow the charts. I trade what I see, not what I think, because opinions in trading are expensive. Okay. What else do we got? We talked all this about this one already. That again, the job data's came. We talked about the Fed rate hike, but also the numbers coming on the weekly unemployment claims supported again. You're going to hear this everywhere. Okay, it's the new easy headline: Fed rate hike expected because number was good. Fed rate hike expected because number was good. Fed rate hike expected because number was good. And it doesn't have to be good. It can just be average. And they're still going to say it's expected. Okay? So if we go back over here, look at the 13th with the unemployment claims. They came in at 274, an expectation of 272. And they revised the previous number slightly from 270 to 269, a little bit lower. 274 isn't exactly a fantastic number. Okay? We look at all these numbers right here. And it's actually a little higher than it has been for the last few weeks. But, hey, it makes for a definitely attention-grabbing headline. So that's why you're going to see it everywhere. We go in, and we look at, let's get rid of that. Not looking for a broker, because they make you a broker. And looking at here, oil exchange crush side on Cushing inventory buildup. So moving on, down, down, down. And what do we got? We already talked about the initial jobless claims. Hitting a 42-year low. Not quite sure that one is everything we expect. So I go over and I look at the unemployment claims at 274. I mean, we had 270 before that. We had 267 before that, 255. So got to be careful on some of these. Let's see. What are they trying to say? Consider zero interest rate policy and a 42-year low and a 4-week average on initial claims. One of these things is not like the other. So, yeah, they may need to go back and rewrite that one. Okay. Or somebody needs to update their economic calendar and what number actually came out. If we go over here, we can go, what number did come out? And you can actually read the claims report. And right there, we came in, initial claim was 274, an increase of 5,000 from the previous week's revised number. The previous week's, however, was revised down by 1,270 to 269,000. So, and I don't expect you to be able to read everything I post. Sometimes I'm just going to have to read it. But let me zoom in and see if that helps you at all. But you can go over, you can look at this on Forex Factory. Just click on the initial jobless claims number, and it will be right there for you. Okay? But again, that's the initial jobless claims numbers that came on in. Okay, let's go on over here. And let's pull up. Let me see if I can find. We'll look at oil with that big slide it's got going on. And let's check it out real quick, okay? So pulling that up, give me 1 second. And we'll see where it's at. Moving down, down, down. Really starting to flatten out quite a bit. Let me throw deviations on here. And let's also look at ICE volume, okay? See where that's sitting at right now. That'll take just a second before it'll pull everything up, but we are sitting pretty much right now. That's not updating for me on what I want at the moment. I have to check that connection. That's really weird. Oh, I know why. Hold on. Let's see here. Come in. Gotta update a quick setting. And I'll come back to that while I'm updating that in the background. But we need to go through, we need to look at our news. What do we expect real quick before the show wraps up? So we'll see how much of that I can cover for you. And I'll update that in the background. Over here, we'll do it. Quick snapshot review of it here at the end. Okay? Let me get that out of the way. Pull this up, and we'll be on our way. Okay. I don't know why that's not loading. Okay. Let me pull it back up over here again. I had it, but then I changed screens. Dive into the news trading plan that's left for what little is left of this week and get you through to next week. Okay? So right now we got, it is August 13th. When we come back, we got a few news reports for tomorrow. We got, and we got a slew of them coming up next week as well. So stay right there. We'll be right back after this break.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour, and it's taking a quick look at oil for you. Oil right now sitting at a 1 deviation move and from settlement, and at about 1.5 deviation move actually on its low there from high to low. And so pretty much flattening out right now, probably right into the end of the day. Wouldn't expect to see a lot more happen out of oil because it is just basically hit its expected move on the day. Let's go and let's look at what we got over here on our news releases. Checking out the euro dollar. Euro dollar has a variety of reports: CPI, core CPI, flash GDP. Not usually a big surprise on any of these. Looking for $35 minimum profit between the combined bought lower spread and sold upper spread. So the two max profits combined should be no less than $35. And looking for an entry at 11 p.m. for 7 a.m. An iron condor right there over on Nadex spreads trading the news. Also with that, be aware if you're not trading the news, that we expect about a 35 pip or less move on that report between those time frames. Tomorrow morning, we got the U.S. PPI and core PPI, small moving impact right there. That report's going to come out at 8:30 between 7 and 9 a.m. We expect there to be a 25 pip or less move, so we're looking for a 25 pip iron condor. Find the lower spread, selling their spread over on the euro dollar. There's another one laying right on top of it coming out, the U.S. capacity utilization rate. And you can do basically the exact same thing. You're going to be in the trade, so it's $25 to $30. With these two trades being at $30, one of them, though, you're getting them at 8 for 10. The other one's at 7 for 9. So the one that's 8 for 10, we're actually looking for $30. The one that's 7 to 9, we're only looking for 25. Okay, and all those are trading on the euro dollar. Other announcements comes out. We'll have CAD manufacturing sales and U.S. preliminary consumer sentiment. Nothing that we expect anything massive to be released on. On Saturday, we're going to have Frank retail sales get released at 3:15 on Monday. And so we're going to get in at 11 p.m. on Sunday. Sorry, I said Saturday. 11 p.m. on Sunday for 7 a.m. expiration on Monday for the 3:15 release. So 11 p.m. Sunday's 7 a.m. Expiration on the dollar Frank. Looking for $30 minimum profit on that iron condor. Notice I do a lot of iron condors because usually things are not rocking that much on most of these news reports like you would think. We got the pound dollar. Looking for a $35 one, 11 p.m. Monday night for Tuesday morning, 7 a.m. expiration. That's PPI, CPI, RPI, HPI, and every other PI I guess you can get. But again, 11 p.m. to 7 a.m. Looking for $35 or less movement on the pound dollar between 11 p.m. and 7 a.m. Let's see here. Looks like Walmart and Home Depot have their earnings coming out next week as well. That should impact the Dow. They'll come out before the market opens. And so for you stock traders out there, or if you're trading the Dow, you may want to be aware. Going on in, let's see. We're going to have weekly oil inventory come out like it does every Wednesday at 10:30. So it can go fast. We can straddle it. We can strangle it. We can even do iron condors on it. So just look at the pricing of the options and what they justify, okay? Wherever the edge is, that's what you want to be focusing on. And then we got, on Wednesday, 11 p.m. to 7 a.m., we got the Frank Trade Balance Report, 2 a.m. So look for 11 p.m. to 7 a.m. expiration for a $35 profit. Again, that's going to be on the 19th. We also have a pound trade at the exact same time, 11 p.m. to 7 a.m., and $35 on that one. So both of those trades are looking for a 35 pip move. As far as the rest of the week, we have CAD wholesale sales coming out. We'll talk about that. We have U.S. Philly Fed coming on out. And we have various reports on the CAD. I'll cover this for you on Wednesday when you tune on in, okay? But really a pretty light news week overall. Not a lot happening over the next 7 days. So expect a little lower volatility for the next 7 days, except for we got that payment due on the 20th, and the symposium starts next week. So end of the week could have some interesting things come up. Y'all have a great day, and I'll see you tomorrow on the Bull Bear Binary Hour with Tommy O'Brien in the morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.